Hi everyone, welcome back to DeFi Daily. Today we are going to discuss about the Tomb Finance forks, and I will try to give an answer to the three main questions that we are wondering about. The first one is why we need this kind of forks. The second one is which is the best moment to buy or sell. Third, what we can expect into the future. And I will do it using the case study of Nacho Finance that is also sponsoring this video. Remember guys that all the contents in this channel are just for educational purpose and nothing has to be turned into financial advice. If you want to invest in anything, great, but do always your research first. Okay, let's start immediately with the platform of Nacho. As you can see, the interface is pretty close to what we have seen into the Tomb Finance original protocol. But before going deeper inside this platform, I will try to answer to the first question, why we need this kind of protocols. And the easy answer is because what DeFi needs in order to grow and to scale for real is more liquidity. Each protocol, each new crypto, each kind of swap or exchange needs another pair in order to exit your position and to stop being exposed to a certain kind of volatility. And in order to close your position, what you need is liquidity. It could be a stablecoin or an asset that you think that it will appreciate during the time. So this is the reason why we are talking a lot about stablecoins, and every day a new stablecoin is coming out. Let's say meme, USD, all the decentralized stablecoin are popping out because they are really important into the DeFi ecosystem. On the other side, another solution is instead of having just an asset that has a stable value, the idea behind the Tomb Finance forks is having an asset that is crucial for the ecosystem and it will appreciate during the time, because instead of having just an asset that has always the same value, and to be honest, with the inflation in the real world, it's something that is depreciating during the time, it would be much better holding like an asset that is appreciating. And this is the goal of, for example, Tomb. Tomb is pegged to the value of one FTM. And the idea is if the ecosystem of FTM or Phantom is growing, also the value of FTM is growing. But the problem on using FTM as a liquidity pair is that it has a limited supply, and creating too many use cases for this kind of asset, it will appreciate the price too much. So it is something that is not useful for this use case. On the other side, having an asset that can increase into the supply but is pegged to the value of one FTM, or in this case on Nacho Finance is working this a fork on Polygon, the Nacho token is pegged to the value of 1 ETH divided by 1000. So this is another interesting use case for Nacho, because it is creating a value, or at least use cases, possibility to take some yield from your Ethereum at a really high yield, because most of the time when we are talking about Ethereum, we don't have so many opportunities to earn so much. This is one of the reasons because Nacho Finance chose to go with Ethereum and not with any other kind of asset, because it is taking the advantage of having Ethereum, so giving to the Ethereum holders the possibility to earn a lot, but on the other side it is taking advantage from the low fees on Polygon. So the idea behind Tomb Finance forks is creating more supply in order to have a liquidity that, instead being just stable pegged to $1, is something that is increasing in value the more the whole ecosystem is increasing in value. In the case of Tomb, the value is related to the value of Phantom. In the case of Nacho, the value is related to how the Ethereum is growing. If you compare, for example, the two of them, in this case we are talking about Ethereum that should be a more stable asset than just Phantom. Going to the second question, how we can decide if it is a good moment or not to sell your tokens or buy them. In order to understand it, I will explain to you briefly how does it work at Tomb Finance fork, and more specifically about the Nacho Finance. As you can see, we have three different tokens: the Nacho token, the N-share, and the Nbond. As I told you before, Nacho is pegged to 1 ETH divided by 1000. And share is the governance token. So if you hold this kind of token, you will be able to participate to the governance. And Nbond, it is the other token that you will be able to buy it only if the price of the Nacho token is below the peg. A good innovation by Nacho, they have been the first one to introduce this kind of dynamic, is that you will have the opportunity to buy Nbond not only in the moment when it is below the peg in order to push the price of Nacho again to the peg, but also in the moment when it is above. And in that case, you will have 3 days of a vesting period. If you are interested in it, you have just to go on Oven, and you will have the opportunity, as you can see, to buy the Nbond if it is above the peg, or also if it is below the peg, exactly as it is here. As you can see down here, there is a Nbond vested. It means that this is the countdown that is counting 3 days in the moment when you are purchasing the Nbond. Why you should purchase an Nbond in the moment when it is above the peg? For the simple reason that you will be able to buy it at a discounted price. The reason why the Nacho Finance is selling some kind of Nbond at a discounted price is because in this way they will be able to build their own liquidity. As you can see, the idea of owning, each protocol owning his own liquidity, it is something that is really powerful, and all the different protocols are trying to go in that direction. And also Nacho Finance is working this way. As you can see, in the moment when we are talking about Nacho, there is not only the possibility to farm with Nacho and share, but also to use Nbond to stake them and to start earning. In this case, you will earn around 100%. And this is quite powerful if you think, because they are creating more use cases and more incentives to people to buy the Nbond, that is also the token that is helping the protocol to keep the peg. So let's go back for a moment here just to understand what is the dynamic. So Nacho is the token that is pegged to 1 ETH divided by 1000. In the moment when the Nacho price is above the peg, it is called an expansion phase. It means that new Nacho tokens will be minted and distributed. The Nacho tokens will be distributed to all the people that are just staking and share. And share, it is the governance token that you can earn in the moment when you are farming. As you saw here into the farm section, you will see that here you will earn and share in the moment when you are just farming with the LP Nacho WETH. The same in the moment when you are farming with the pair and share Matic. And also the same will happen in the moment when you are just staking your Nbond. You will start earning Nshare. So Nshare is the governance token that you can earn in the moment when you are staking your LP tokens or Nbond. The expansion phase is called into the ball here, and as you can see right now it is stopped because for the only reason that the price of a Nacho is below the peg. But in the moment when the price is above the peg, this system will start producing an APR of 2,670 with a daily APR of 7%. So we are talking really about a really high APR. And all you have to do is just to stake your Nshare and start earning some Nacho tokens. So in this way, we will see that in the moment when it is above the peg, everyone will just run to buy Nshare. This is one of the reasons, because in the moment when we are in expansion phase, so the price of the token is above the peg, many people are just starting to buy Nshares, and the price of this kind of token is pushing higher. In the moment when the price is below the peg, people will start or should start to buy Nbond. But what is the real challenge, and how we can understand if it is a good moment or not to buy a token or another? The main challenge of all of these forks is keeping the peg, and more specifically, the problem is when the protocol is going below the peg, because this kind of system can survive as long as it is able to maintain this kind of peg, because as long as it is above, everyone are happy because they are just printing new money, selling and make money. The risk is in the moment when it's below, And buying Nbond, yes, it is something that will give us the opportunity to come back above the peg and start playing again. But this is a matter of trust. And the main point is, do you trust that protocol? If you trust them, yes, that's a great idea just to buy Nbond, because you are helping the protocol to be healthy. And also, if you remember in the moment when we were talking about the double airdrop about Nacho Finance forks, that if you missed that news, I will leave also a link in the right corner here. What I was telling you is that protocols are rewarding double people who are helping the protocol. In this case, if you are bonding Nbond, there is the possibility, if something will happen in the next future, that people who help the protocol to keep the peg will be rewarded more than people that were just using the protocol into an expansion phase. So trying to understand and trying to answer to this question specifically for the Nacho Finance. Let's start to say that, as you can see from down here, this protocol made a KYC with Ragdoc, and so it means that yes, the team is anonymous. It means that we don't know their real name. They are not fully doxed, but on the other side, they have done a KYC with Ragdoc, so we at least know that they have been checked by some kind of entity. On about the audit, an audit should come into the next future, but it is still not being audited, the platform. What else we can say about this protocol? And to me, another thing that we should evaluate is the roadmap. What are their plans for the next future? Are they trying to build something that can be sustainable into the future? And here we are coming also to the third question. I was saying what we can expect into the future. As I was saying before, what we need is something that is sustainable. In order to be sustainable, it has to create value, and to create value we need to work for the long term, not just for speculation, because yes, at the beginning it's quite easy to attract people because they are simply giving out money and everyone wants to have some free money. The real challenge is in the moment when we have to evolve to something else, we have to keep the peg and we have to enter in a phase that is more a maturity phase. In this moment, there is the big challenge. In the case of Nacho Finance, they are trying to build a whole ecosystem. Right now, they are working on AntSwap, that will be like an AMM, so the possibility to swap different tokens. As you can see from their Twitter, this is something that should be live around, yes, as you can see here, around 2 weeks. The post was about yesterday, so we can expect that in about 2 weeks they will be able to release these new features. I talked with them, we have spoken about their idea about the futures, and they are really trying to build a whole ecosystem that is comprehensive of having a money market, so giving the opportunity to people to buy and lend different cryptos, and on the other side also Antic and Auto Compounder. I will leave you also into the description below this kind of Medium article that they are explaining what are their plans, and that just came out the other day. So in the moment when we have to decide if it is a good idea to buy or sell a certain token, and in this moment, for example, on Nacho Finance, the whole point is we are going to buy Nbond or not. To me, a whole point is about, do you believe that this project has a future? Do you believe that they will be able to deliver the product? Because that's quite probable that if they will deliver the product into 2 weeks, it is possible. Obviously, it's not granted. Remember this. Nobody can predict the future. We are here just to make some hypotheses and trying to understand what will happen in the future. Nobody can say to you 100% what will happen. And the same story in this case, with any probability, if they will be able to deliver in 2 weeks this kind of product, the platform, so the Nacho price, will be able to go back above the peg. As you can see from the chart of the price, you can see that we made a first phase pumping a lot. After that, the price crashed in the same moment when Bitcoin was just suffering. And after that, it has been able to recover the peg and now is moving above the peg, below the peg, above the peg, and so on. The real challenge is, what do you expect from the next future? If you expect that it will be able to recover, and if you trust the project because you have seen they have done a KYC, they are doing with a roadmap. So they having a future, they have an idea about the future. The best way to do it to sustain the project is just buying some Nbond. The reason why buying Nbond is something that will help the project, help the protocol, is because in order to buy Nbond, you need to have some Nacho. If you already had your Nacho in your wallet, you are just reducing the supply. If you didn't have them into your wallet, you can go to the market, so you are pushing the price higher and convert them into Nbond. Remember that buying Nbond is like buying at a discounted price the Nacho token. In the moment when the Nacho token will go back again above the peg, you will be able to sell them and retrieve even more profit. All you have to do is just to press max, and after that purchase. Confirm the transaction with your wallet and you are done. So this is the best way to sustain a project that has the price of the token below the peg. It gives you a double advantage, because you are from one side sustain the project, so you are helping your own investment. On the other side, being able to buy at a discounted price like Nbond is obviously the tool that is giving you the higher return. The point is how you have to choose if it is a good moment or not. First of all, you have to believe in the team. You have to believe that being KYC is good. You have to believe that they are delivering product, as for example we have seen in this case, talking about working on owning their own liquidity. They have been introducing new kind of feature, for example the possibility to farm with Nbond. You have to believe that they will be able to deliver their roadmap, and the whole concept is a good idea. If for example you have to like the idea of having as a peg the Ethereum, that is a token, that is a crypto that is quite important, has a crucial role into the whole DeFi space. So first of all, it's about trust. If you trust a project, yes, this is the best moment to enter. But even in this case, sorry if I have to say it, I want to advise you, don't pin. Just allocate a certain amount that is coherent to the profile risk of this protocol. And remember, all Tomb Finance fork, it's not just a matter of a Nacho, it's something that is it applies to all the different forks. The profile risk of these protocols is quite higher than just using, let's say, Uniswap or another kind of DeFi protocol into this space. So do well your math and manage your investment in the right way, because yes, that's insane having the opportunity to earn 7% on a daily. That's great. But on the other side, you have to manage your risk. So allocate the right amount. In any case, we will keep following this project, and I will have an update maybe next week or the week later. So I will tell you also how it's going on with the unswap feature and how it's going on with the challenge to keeping the peg. Guys, thank you for following. If you have any kind of question, just write me into the comments section below. And remember, if you like this kind of content, the best way to sustain is always leaving a big thumbs up, drop a comment, and I will see you tomorrow with another video. Bye guys.